Hi, I'm Jie Gong, partner of Pantheon Ventures and head of ESG committee at HKVCA. We're at the eve of the award ceremony for the HKVCA 2019 Award of Excellence for ESG. And I'm very pleased to have the two winners with us. We're going to have a chat about the winning cases by the two GPs, as well as their respective ESG journeys. So let's start.
So thank you very much for this honor, CDH. So I'm a co-founding partner of CDH, responsible for all of the investor relations, and also one of my roles is overseeing our ESG program. The company that we're winning the award for is Bell, which is when we invested was part of a take private investment. So prior to the investment, what we do is we would meet with management. We actually use an insourcing relationship with a ESG consultant. They came, in this particular case, they came, did site visits, worked with management, learned the business, and then identified a series of issues that could be improved. And then post-investment, we worked with them. Clearly, it's pushing management. We're not doing the ESG work ourselves, but helping management and especially giving them the financial resources and the encouragement to do the right thing. And the key areas that we identified that needed improvement, one was in terms of manufacturing. So Bell does do some manufacturing of its shoes, and we improved the use of the equipment. The company actually invested 40 million RMB to buy more than about 1,500 pieces of equipment to upgrade the production facilities. Use of glue is another interesting area where they were less concerned about that, but highly toxic. They could move to a different source of glue that was less toxic. In terms of employment activities, there was lots of noise. We worked with them to add both sound deafening devices as well as improve the equipment so it isn't as noisy. And those are some good examples of what we did with the company.
Great, thanks. And Patrick, over to HKVCA. It's also a company that you have invested for quite a period of time. Could you make some highlights on the improvements you've made on the ESG front?
Yes, and thanks again, as Stuart mentioned, for the honor of being selected for this ESG award. I'm Patrick Cordes, the managing director and CFO of Baring Private Equity Asia. HKVCA is an investment that Baring made about 4 or so years ago, and there really were 2 prongs to the ESG program, 2 major prongs that the company has executed on over this time. One is on the environmental side. The company has worked to reduce almost all of its water waste in its facilities. They also have employed wind and solar energy and also worked on just even office design generally. For example, procuring LEED Platinum status to have more energy efficient buildings. One facility is LEED Gold, actually, another one is LEED Platinum. That's the environmental track. The second track is on the social side, where the company has always had a strong focus on social responsibility and working with groups within the communities in which they operate, which really serves a dual purpose, of course, helping the community, but at the same time also fostering engagement with the employees. So HKVCA is an IT services company, so it's essentially professional services where you have a lot of staff, and it's very important to keep them engaged. And it's actually both the environmental and the social does a lot to foster that engagement. On the governance side, as we've gone on this ESG journey, it's also dovetailed with sort of enhancement in portfolio management and value creation overall. So we employ something we call the Baring Management System. So that's post-investment how we essentially own and run and manage the company through the investment lifecycle. ESG is embedded within that system, so that it's, of course, we look at it before investment, but then it permeates throughout, both in driving ESG initiatives in the companies. But it's really it's sort of our own governance system and how we manage the investment that then also ensures we put in place best-in-class governance at the portfolio level.
Right. Well, both CDH and Baring are well-established private equity businesses. So you have traveled long on the ESG journey. Could you share with the audience on what that journey looks like from day one?
Patrick?
So ESG is something that always was throughout the investment process or in the evaluation process from day one, and looking back, to the year 2000 or 20 years ago. And that was normally saying, oh, is there some sort of environmental risk here? Maybe it's a manufacturer. Was there pollution? Of course, all kinds of social responsibilities, other issues, governance, also in a transition, and depending whether you're making minority, majority investments, it might make you look at it differently. That was sort of 1.0, if you will. As we come on now to, I'm not sure which number we're at now. Maybe it's 3 or 4 or something. But it now it's something that is actually value enhancing to the investment even. So finding those opportunities like in Hexaware, where if you can make these environmental improvements, if you can foster the company engagement, do the right thing in the community, it actually enhances the value of the company overall. And then it, so this is the sort of phase that it's in now. Of course, every case will be different. From a Baring standpoint, we also did take the step of joining the UN PRI. Really, it's just demonstrating a commitment to the cause and ensuring the correct focus on it.
And actually, our journey for CDH has been quite similar. I think the audience might know CDH was one of the earliest pure China GPs. And from the start, the vision of the firm was to marry world-class governance from international best practices with the realities of China. And from day one, even in our first fund in 2002, we brought in IFC as a partner, built an ESG system, but similar to what Patrick said, that was version 1.0. It was really more about the screening and less about the involvement with the company. But just like we used outside accountants or outside lawyers, we felt you needed to systematize the environmental or ESG work. In that first phase, we didn't work with outside consultants. Fast forward to 2013 when we raised Fund 5. We re-looked at what we were doing with our ESG and realized that we had become deficient. We revamped our whole policy, and then we went to we chose the route of working with a third-party consultant to help our project leaders, similar to lawyers and accountants. And so we have an insourcing arrangement with a group called Greenment that all they do is ESG evaluation, and then our deal team works with them to help the companies. And it has been an interesting ride, and I think now you're starting to see, when our companies, and I'm sure Baring's companies, go public, having done all this work, sets them up for better valuations, better reception from institutional investors. And what we've also found is the best companies, it's not a fight. They want to work. They just need, maybe they need a little bit of push, just like all of us. You need your mother to tell you to clean the room or whatever. And that's, but it's not a struggle. We haven't found it to be a struggle.
We have seen a broad-based submissions from the Asian GPs, private equity firms, venture capital firms, as well as credit debt managers. So quite a wide representation of GPs who have found that ESG indoctrination into their investment process enhances the value. And there are many cases in the website of HKVCA from all the submitting cases that you can review at your leisure. So with that, we'll conclude the interview. Thank you both.
Thank you.